Alright, dollar index trading inside of this fair value gap here. Alright, this is also a gap. Not a lot of people pay attention to this kind of stuff, but between this candle's close and that candle's open, yes, it's a new day opening gap, but it's also an imbalance as well. We only have sell side delivery offered here. We trade down, we open higher and trade down again. So there was no buy side offered on this time frame. So we trade up into that. You can see the bodies. Okay. We have the high, this fair value gap down here. But why do we close right here just above the high that fair value gap? Is because we're trading into that imbalance right there. Let's drop down to a 15-minute chart. These lows down here are really clean. There's a lot of sell side resting below that. It's a little too smooth. And that's that gap on the daily chart. You can see the bodies respecting that beautifully before reversing. NASDAQ, let's see. Okay, so we made a new high for NASDAQ, a new all-time high. All right, so trading well above that midnight open. So far, there's SMT between ES and NASDAQ. Notice how S&P made a higher low here, here, and the Dow made a lower low, and NASDAQ also made a lower low. So there's some SMT there. As long as S&P can stay above this low, then that SMT is staying intact, and we're likely to see higher prices still. And then again, we have the Fed chair testimony at 10 a.m. But same thing as yesterday, I won't be pressing the button this morning, but I am live trading and live streaming the PM session later today. So like in an instance like this, if I was to press the button this morning because I implement the midnight opening price in my trading, I'm already telling myself, I don't care if it looks really bullish. I don't care what kind of fair value gaps we form, bullish order blocks, any of that. I'm not looking to buy if we're this high above the midnight open. And I'm accepting the fact that if NASDAQ wants to rally 100 handles higher, I just won't be a part of that move. Like I can still buy above the midnight open, but I want to be close to it. Like there's nothing wrong with buying here or maybe here. But if we're all the way up here above the midnight open, then at that point, my job is pretty easy. I'm just sitting back and saying, okay, I'm waiting for buy side to be taken, a market structure shift to the downside, fair value gap, look to go short. So on any other day than today, if I was looking to press the button, we have this fair value gap here, I would forfeit that setup simply because we're way above the midnight open. That's just one of the rules that I'm implementing. So me personally, I wouldn't be interested in buying this or buying anything up here for that matter. Now, can it run? Obviously, yes, it can, but trusting my back testing and everything that I studied is better for me personally than just sit on my hands. Watching these two down close candles, one bullish order block coupled with the fair value gap. If we get below that, then I'll be treating this down close candle as a bearish breaker and then possibly look for a rotation lower. So I'm watching to see if this right here can offer support. From back testing and everything that I studied, this is why I'm not comfortable buying this high above the midnight open because this tends to happen a lot. So if you were to buy it here or this fair value gap here, you have to realize you're buying at a premium. So you're buying way above that midnight price. So because that failed to offer support, I'm looking at this right here. Those bullish order blocks, you can use that as an inversion level. So if they fail to send us higher, you can flip that and treat it as a bearish breaker. All right, so I'm watching this fair value gap in here. Ideally, I want to see that send us lower. And me personally, I would be way more comfortable taking this short than I would be taking this long up here. Simply because where we are in comparison to that midnight price level. And then for targeting, I would like for us to get back below the midnight open because that's a discount. So going short here, put your stop loss above the breaker. You could target sell side, but if you're targeting this low, you might as well reach for the midnight open. If it was any other day besides today, what would be your confirmation for entry short here? Taking out this low, that market structure shift right there. Because remember, we're looking for this bullish order block to offer support. I said if that order block fails to offer support and we take out this low, then I'll be treating these two candles here as a bearish breaker. So once we displaced, took out this low, immediately turn these two candles into a bearish breaker, and we formed a fair value gap. But notice where we formed the fair value gap is in the lower half of the breaker. So if you take mean threshold of that, I'll zoom in a little bit. So this fair value gap forms in the lower half of the breaker, which is what you like to see. The high of this candle perfectly taps midpoint of the breaker. But as far as confirmation, I just wanted to see this low taken out. Because you have to remember, we're in a deep premium anyway. We're way above that midnight open, so taking a short here or taking a long here or trying to buy this fair value gap here, your probabilities of that are lower because you're buying at an expensive price. But this fair value gap inside of the breaker after a market structure shift, take a partial at this bullish order block if you can, and I'll be targeting that midnight opening price. I don't want to see this fair value gap traded too. Treating that as a breakaway gap, we go into this short-term consolidation, going sideways, and then we get this energetic price move that break lower. I want to see that stay open, but this fair value gap here, we can work this. Preferably don't want to see this swing high taken out. Okay, if we can move away without taking out this high, then I'm definitely looking for this bullish order block, and then sell side, and then our midnight open. But again, you have to pay attention to what the dollar index is doing too. All right, so if I was in this trade, this is how I would take my partials. If I had 3 contracts on, let's say, taking one off at the opening price of this down close candle, sell side liquidity below this low, I'll pay myself there, and then I would hold out for the midnight open. And the same thing applies for the dollar index. Notice how dollar is way below that midnight open. So if we were to tag that sell side, I'll be looking for some sort of retracement or reversal going higher. So this is exactly like if I wasn't live streaming, if I didn't have a Discord, this is exactly how I would tape read or practice without pressing the button. Like if I already made my mind up that I'm not trading this week, or if I'm not profitable and I'm just trying to learn how to read price action, I would outline a potential trade without taking it. I'm not even logged into a paper trading account, but outline a trade idea, talk myself through why this fair value gap should stay open. I would outline my targets here, and then I'll have the dollar index pulled up. Now, if we get below the swing low, which it looks like we're likely to do, I'm treating this down close candle as a mitigation block. All right, it's not a breaker. We have a high, low, and a lower high than this one. So instead of a bearish breaker, this becomes a mitigation block. I want to see this entire down close candle act as resistance, ideally. Up close candle, bearish order block, take that opening price. Notice how the bodies are respecting mean threshold of the mitigation block. So I want to see us stay below that. And then first partial would be the bullish order block. Notice the high of this candle. Same thing that happened here with this breaker. Remember, we took midpoint of that. Midpoint of the breaker, this candle traded up. the exact high of this candle, mean threshold, we sell off. Look what happens here. We open, trade up, mean threshold of the mitigation block. We come off that high. This is also a bearish order block. So now I want to see our first target hit here. But notice the bodies. I didn't want to see us trade to the upper half of the mitigation block, but it's fine if we did. We had a 5-minute fair value gap here, but the body's still not closing outside of this down close candle right there. And then of course you have this fair value gap here. There's your speed as we rip through that candle, exactly what you wanted to see. Smart idea to take a partial there because these targets aren't guaranteed. So that's a good exit. If I only had one contract on, if I was going short here, I would just aim for that. Now, since we know that 11 o'clock is profit taking hour, I want to see our sell side target and our midnight opening price. I want to see these targets get hit before 11 o'clock because we know 11 o'clock can bring a reversal or retracement. Okay, we can take out short-term highs and then rotate lower. So these two targets here, I'm putting that like on a time crunch. So we have 16 minutes and I'm counting down. I'm watching price action to see if premium arrays, premium PD arrays are still sending us lower. But in my mind, I'm thinking we have 16 minutes to reach this level here and then that midnight open. If we get closer to 10:50, 11:10, that macro, the closer we get to that, I'm probably scaling out of my position if I have more than one contract on. And I'm also watching the dollar index. I want to see that continue to look bullish. I don't look for longs up here. Okay. We're way above that midnight open. Remember I said if we trade inside this fair value gap and rally 100 handles, that's fine. I'm not going to feel any FOMO. Okay. I just won't be a part of that move. But from my studying and what I've learned through back testing, majority of the time, if we're way above the midnight opening price like this, we're not just going to keep rallying unless we're on a trending day. But if you pay attention to the economic calendar, we have the Fed chair speaking at 10 a.m. Is it likely to be a trending day today? Probably not. And if I was in this trade, my stop loss would be placed above this high. Let's take a look around real quick. Gotta pay attention to what other stuff is doing. So gold, looking heavy, took out that low, traded into that fair value gap. These lows down here for gold are just way too smooth, so still want lower prices on gold. Euro dollar looking heavy. We don't care about the Dow. S&P, I want to see if we can get sell side down here. Let's look at the British pound. So British pound, and you could just eyeball this, right? So where do we open at midnight for pound dollar? We open all the way down here. Look where we're trading at now. So if I was trading Forex, if I was trading British pound, am I comfortable buying all the way up here? Probably not. Notice how we're entering that 10:50 to 11:10 macro. As you approach 11 o'clock, expect some sort of retracement or reversal, and that's what you're seeing for pound dollar. And again, I want to see these two targets hit by 11 o'clock, so we have 12 minutes. But I'll start paying myself and running down my equity if I had multiple contracts on. So this low right here, if we were to drop down, take out this low, I'm paying myself right there because we're running out of time. Running out of time in the morning session. And I don't want to be caught in a reversal when I have majority of my position still on the table. Again, my stop loss hypothetically would be up here. So paying yourself here. Well, if I only have, most times I only trade one contract, so I'll be out of this trade anyway at the order block. But if I had two contracts on, pay myself here, I'll be holding out for the sell side, and I'll have my stop loss above this high, which is also a bearish order block. Small little volume imbalance right there. And then notice the bodies again. I still want to see us stay below mean threshold of the mitigation block. So same way I wanted to see speed underneath this low here, I want to see us quickly rip through that There's a lot of sell orders, a lot of sell side liquidity underneath this low. If we were to just slowly work our way towards the sell side, traders are going to start pulling their orders, which is not what you want. So think about it. If you're short here or here or here, and you're looking to exit here, you want price to be in a hurry to grab the liquidity at this low and underneath it. Because traders who were fortunate enough to go long in any of this price run here, stop losses are underneath this low. If we were just slowly get there, they're just going to close their positions and walk away. That's when you want to see us quickly rip through that, be in a hurry to take out that sell side and not give them a chance to pull out. And again, we have about 7 minutes and 20 seconds for these two targets to get hit here. Notice how we form equal lows. This low here, we come down, rally away, we create this low. What is that? Relative equal lows. So we have more sell side generating underneath these lows here. So you definitely want to pay yourself, take a partial if we were to run this out. Because these targets aren't guaranteed, so you can't just hold out for that. Especially if you only have like 1 or 2 contracts on. You got to pay yourself here. This down close candle here, bearish breaker. I want to see that send us lower. We have a high, low, higher high, last down close candle in between your two highs. Draw that through. That should send us lower. And I want to see a lot of speed here. We have 5 minutes, so in the next 5 candles, I want to see this target hit and possibly get back below that midnight open. All right, so right there, you want to pay yourself. We just took out relative equal lows. That's a good partial. And then I want to see speed underneath here. And notice what dollar's doing, getting back above that midnight open. Clearing the buy side, yes, but getting back above that midnight open means we're trading back above into a discount. So I want to see dollar get above that. Up close candle here for dollar. It's a breaker. We have a low, high, lower low. Last up close candle in between your two lows. Draw that through. We have a fair value gap here as well. I want to see that take us above the midnight open. I want speed. Large, fast down close candles underneath this low. You don't want the sellers down here or buyers down here to pull their orders. So you want to see us quickly snap down and grab that. But if you're trading like 10 micros or something like that, pay yourself underneath this low. About 10 seconds till 11. And there you go. No coincidence. South side target hit right on the dime, 11 o'clock. That's perfect. Called all this stuff out real time. That was fun. I want to see us get below that midnight open just for completeness sake. PM session stream today. We're going to hop back here. There you go. There's your speed underneath this low, not giving them a chance to pull their orders, getting back below that midnight open price, hitting the sell side exactly at 11 o'clock, trading inside that midnight open 1 minute after. That's not bad.